Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, November 1st, 2016. So, we saw the Bears actually take control today, and they had picked up what they were left off on Friday, and we saw some buying towards the end. It actually makes sense where the buying came because it closed the gap that was here. Even though I still think it would have been better off if they came down to this level here, which they may. Just today, though, they kind of, once we broke this support, we've seen this happen before where they break support, come down and then bring it back up again. We saw them do it here where they broke it by a little bit and then rallied it back up again. They lost this support by a little bit and then rallied it. So there's, as I mentioned, there was two ways that, I just really wanted to throw out what I was seeing, and I wasn't pounding the table with either one. But one of the kind of trade setups that I said was if it takes out to 205, you can take a small piece, then wait and see if it pops back up to the 2125 level to fill it, and then you just put a stop, somewhere in this level here, which I'll go over in a little bit. But in any case, if you got that, then you kind of have your half position and you're just going to wait. And these should definitely be smaller than normal positions just because there's a lot of uncertainty that's coming out in, the next 7 days. So even though things look like they're going to fall apart and it would make sense to see lower before higher, you don't know what's going to happen just because it's news orientated that's moving the markets. It's not really off at the technical end of things. So anyway, if they do move it up, then what we're looking at as far as resistance is right back at this 21.18, 21.14 level. So this is the first layer of resistance. From there, hang on one second, I didn't move these down. So from there, then we're looking at up to this 2134. So anywhere, let's just say the 2132, 2134. Or even the 35, which is a moving average. This is going to be heavy, heavy resistance. So instead of maybe taking the second half at 21.25, wait and see if it gets up to the 21.34 level. That was the second option, was you wait for it to pop back up and then you short it and for the next move down, which I do believe we're getting. I don't believe these are the lows. It's just a matter of how they plan on getting there. But what we do know, we've had a series of lower highs and lower lows. So the Bears are in control. If they bounce it, then, anywhere up here is going to be heavy, heavy resistance. I think it will be a gift because I think the next move to the downside is going to be, it could be fairly sharp. And if that happens, I expect this all to end Wednesday. Once the elections are, behind us, I think things are going to start, being a little bit easier to trade. And I wouldn't be surprised to see a rally after that. And that would be, that would really, it could be after we have a big drop first. That's why I'm saying it would make sense that if we head lower first and then things accelerate, let's say, as we get into the, right near the elections and we come down to that, the target areas that I've been saying for a pretty long time, which has been that 20, anywhere from the 2077 down to the 2048 level. And if we could get there, by next Tuesday. It's a week away. We made it all the way down to the 2097. So yeah, there's a shot that we may get there by the end of the week. So anyway, they broke this descending triangle here, so that's actually hinting that the next move is coming all the way down to the 2035 level, which again makes sense. So right now we're pretty oversold. As you can see, we don't have bullish divergences on the 16-minute chart, so this bounce is most likely at a bare minimum going to come down and test these lows again, or they're going to break them and head down to that 2077. But we have no bullish divergence, but we're pretty oversold right here. So it's a little dangerous to be jumping aggressively short here. I'd rather wait and see if it bounces up here. Even if you took your half position at the 2106, you just take the other half when it gets up here. So, if they open up down tomorrow, then we could get some bullish divergences, especially if they go up and then down. And that's from there, I would probably just be a little cautious and say, if we do make the lower lows on it here and we start seeing some bullish divergences, let's just step out and wait, even if, or just put a stop at your entry, however we want to work it. But the thing is that once we start getting the bullish divergences on the 60-minute charts, that's when you want to start just moving to the sidelines, and then we start looking for when the low is going to come and look to buy it. Because like I said, that next move could be used on the long side, especially if we start making lower lows and we have some bullish divergences. 15-minute chart, this is the resistance zone. It's really coming anywhere from this 21.19 and it goes up to this 21.32, 34 area, or 35. This is going to be tough to break through. I don't think we're going to see enough buying power, and I don't think the shorts are going to jump out heading into this uncertainty period. And we know that the Fed isn't going to be doing anything, so they're really not going to be able to shock the bears on anything on that end of it. And really, that's if they get up here, I think it's going to be a gift to short. And really, we're just moving your stops someplace above this. Let's just say the 2041. So if they pop up to this level, our stop's going to be here, because that will actually, they'll be breaking through some resistance levels, and you want to be short. But as you can see, the resistance is going to be pretty heavy right there. So right now, like I said, I think that today did change a little something where we could see lower before higher, and it's actually what I've been expecting, or I've been saying it could, but I've just been a little on the sidelines because of the elections and the uncertainty, and I don't like getting aggressive on either side. But today we broke some support levels, and if we see some follow through, we probably could see the S&P trading down at that 2080 or even down to the 2050. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.